how am I going to maximize return? But most long-term investors, and certainly endowments, are thinking about protecting value. Okay, where does value come from, right? And all of these assets are dependent on things like ecosystems and biodiversity and a stable climate and stable social systems, and the rule of law. And if you start to lose these things, you place all of that value at risk. And so it's really just an objective recognition that you are not going to maximize or protect financial value if you're not also protecting social and environmental value.
This episode is brought to you by Impacts Asset Management and the Intentional Endowments Network's Endowment Impact Benchmark. This is the Future of Finance. Hi, everyone. Welcome to the Future of Finance podcast. I'm George Dyer, and today we're joined by Pedro Henriques de Silva, Director of the Shifting Trillions Initiative at the Sierra Club Foundation, where he provides strategic direction for the foundation's leadership role in shifting trillions of dollars from the current fossil fuel-based extractive economy to a renewable energy-based regenerative economy that addresses the climate crisis and restores ecosystems while advancing social justice and equity. Prior to joining the foundation, Pedro was an investment associate at Global Endowment Management, or GEM, where he led work on impact measurement and underwriting for the firm's investments. I developed their net zero and climate justice thought leadership. He's also one of my board members at the Intentional Endowments Network, so I have the privilege of working with Pedro quite a bit. And in this episode, we talk about his work at the Sierra Club Foundation, his previous work at GEM, his focus on climate justice, and his advice for folks that are looking to get into this field. Pedro is a great guy, very thoughtful and strategic, genuine, so nice. Always a pleasure to talk to, and really a great big picture thinker. So I think you'll enjoy this episode. Pedro, welcome to the podcast. Thanks so much for joining me.
Thanks so much for having me.
How you been?
I've been good. We got unexpected snow, which seems to be common here, but
nice.
Good overall. How about yourself?
Getting in the spirit. Same. Yeah, things are good. And as we record this, we're just wrapping up year-end stuff, so sort of a busy sprint to the finish, but all good. And really appreciate you taking the time here to share your thoughts and some of your work.
Would not miss it.
So I definitely, we've known each other for a while and sort of worked through different stages of your career and a ton to cover. I would love to hear about your current role at the Shifting Trillions Initiative, the Sierra Club Foundation's own work around sustainable investing, including your participation in the Endowment Impact Benchmark with us at IEN, your previous role at GEM, how you got into the field, maybe most importantly, the work we've been doing together around climate justice in the context of net zero portfolios, and just general trends in the space. So yeah, diving in, would love to just hear briefly kind of an overview of the Shifting Trillions Initiative and what is it and what you're working on there.
Absolutely. So Shifting Trillions very broadly, it sounds lofty, but it really is about how we leverage capital to move as quickly as possible towards the world we all deserve. And when I say that, I always like to distinguish between capital and, capitalism, in the sense that I think oftentimes people say, oh, we're doing conscious capitalism or stakeholder capitalism or et cetera, et cetera, et cetera. But capitalism, like all the other isms, is just an idea about how we organize society, our resources, our structures, et cetera. We think about capital when it comes to shifting trillions. We're really just thinking about capital as a tool. What are those resources? And so there are three main forms of capital that we're looking at in shifting those trillions. So the first is financial capital, money. Mm-hmm. The second is social capital, relationships. And the final one is intellectual capital, or ideas. And what we're trying to do is we're trying to use money, relationships, ideas to get to a healthy planet for everybody, right? The world that we believe everybody deserves. Mm-hmm. And the reason we're doing that goes back to the purpose of the Sierra Club Foundation. So the Sierra Club Foundation is the foundation for a healthy planet. And many folks will have heard of the Sierra Club, which is not the same organization as the Sierra Club Foundation, mm-hmm. but we are sister organizations. And so the Sierra Club Foundation is the 501c3 fiscal sponsor to the Sierra Club. So we sort of have a shared vision for a world that is healthier for everybody. And the Sierra Club is the largest grassroots environmental organization in America, if not the world. And so the three main objectives of the Sierra Club Foundation in that role is to support the charitable work of the Sierra Club, to be a good partner to them and to our allies. And finally, to be a leader in that shift in trillions that's needed to move away from the sort of extractive, unfair world that we have and towards the more just, regenerative world we can have.
Mm-hmm.
And the process by which we do that is that shifting of capital.
Yeah. And I mean, my understanding is this right, that the Sierra Club Foundation, in a way, is sort of like the endowment of the Sierra Club, sort of serves that function, similar to how some public universities have like a separate foundation that kind of serves as their endowment. Is that a fair analogy?
Yeah, it's a little trickier because the club also has their own sort of endowment vehicle, but you
Gotcha.
can think about it similarly to that.
Gotcha. And so the Sierra Club Foundation is sort of role modeling, I think, in a great way, a lot of that, how to leverage the capital there that they're investing to align with mission. And would love to hear, yeah, just a little bit about how that journey has gone at the foundation in terms of thinking about how best to do that while still generating the returns that are needed to kind of fulfill the mission of the organization.
Yeah, absolutely. So the foundation's been doing this for over a decade. I've been in this role for maybe 2 years, going on 2 years. And um, a big piece of that journey was just a recognition that here you are the foundation for a healthy planet. And what are your investments doing, right? Not just what are your charitable works doing? I think a lot of organizations will say, oh, let's make as much money as possible in our investments so that we can give as much away in our programmatic work.
Right.
But the foundation, like many other foundations who are like-minded, realize that, hey, if you're doing it that way and you're not paying any attention to where your investments are sitting, the impact that you're having on the world might be running directly counter to the impact that you want to have as an organization. And so for the foundation is really just about marrying those two things,
Mm-hmm.
being a fiduciary. And I think what's important, and the real reason this is important to us, and certainly to me personally, is that if you zoom out and you look at the world and you look at assets, which are fundamentally what investors are concerned with, I think a lot of people sometimes think about, to your performance question, how am I going to maximize return?
Mm-hmm.
But most long-term investors and certainly endowments are thinking about protecting value. So you're thinking about maximizing risk-adjusted return because in the
Mm-hmm.
long term, you want to protect the value that will benefit your beneficiaries or your clients or your students or your stakeholders. And in protecting that value, you also have to remember, okay, where does value come from, right? And all of these assets are dependent on things like ecosystems and biodiversity and a stable climate and stable social systems and the rule of law. And if
Mm-hmm.
you start to lose these things, you place all of that value at risk. And so it's really just, it's really an objective recognition that you are not going to maximize or protect financial value if you're not also protecting social and environmental value.
Mm-hmm.
And so that was really our impetus behind, why do we want to invest in this way? What does it mean to be responsible with your investments? Why is sustainability important to an investor? And so on and so forth.
Yeah, it's so true. I mean, there's that old quip of like, there's no business on a dead planet. We can't have successful returns at all if we're undermining the very social and environmental systems that we rely on. And I think that does get lost in so many of the conversations around quote unquote financial performance or maximizing returns because it is you're right. It's like what about risk adjusted returns? What timeline are we talking about? There's this whole concept of kind of enlightened self interest to say like to think about long term success and long term returns. It doesn't mean maximizing the cash back in the next 12 months or whatever, because that can actually undermine that longer term success. Um, that's great. And I would love to hear, it's been great working with you and the team on the Endowment Impact Benchmark. For folks who don't know, this is a new initiative that we've launched at the Intentional Endowments Network that provides an assessment, rating, and feedback for endowments around their progress around these issues of mission aligned investing. Yeah, and we'd just love to hear your thoughts on kind of how that process went kind of at this stage in your journey in terms of, getting that third party verification and where you see it going from here.
Yeah, also important for sure, because there's a lot of people in this space and a lot of institutions who are doing great work. There's not as many people and institutions who are validating that great work. So
Mm.
it's nice to have sort of a centralized place where you can say, hey, from an endowment perspective, what is all of this effort panning out to according to this third party verifier? So that's been super useful. I'd say, um, process wise, it's tricky. I mean, I think you need to have a system that works for people who are very early in their journeys, or people who've been doing this for 10 years plus.
Hmm.
You have to have a system that accounts for different types of portfolios, with different makeup of asset classes and so on and so forth. And I think
Hmm.
the endowment impact benchmark does that pretty well, especially given that this hasn't been done to this level before. And so it's been good to sort of do that. And I think the main sort of surprise takeaway um, was that validation piece. It was saying,
Hmm.
hey, when you're used to keeping your head down and just working hard, sometimes it can be nice to look up and say, oh wow, here's all the work we've done, and
Yeah.
just here are the metrics we've collected. But here is an external institution who says, we think that you are doing this, to a really rigorous and valuable degree.
Yeah, yeah, it's true. It's great. I mean, we've put 15 endowments and foundations sort of through the process now, and as that grows, hopefully that'll just be more and more valuable too, to get everyone to get a sense of kind of where the field is and what best practice looks like. And you're right on this sort of, that's something we wrestled with in designing, was how specific to get. And as you know, a lot of the questions and analysis kind of focuses on the process of thinking about this, the policies that the institution puts in place, and not so much into the details of like what individual strategies is the endowment invested in, or what are the underlying holdings that the managers have, which I think is necessary, and I think the right level for asset owners to be looking at this stage. But in some ways, it's a little unsatisfying because it's not as tangible of like, okay, what specific examples of high impact investments are these institutions making. So I'd love to hear if there are any kind of strategies that the Sierra Club Foundation has invested in that have been particularly meaningful or kind of successful in terms of alignment with mission.
Yeah, absolutely. I think there's been a couple. There's a few projects, including Sage Development, and the Standing Rock Wind Project, which did exactly what it sounds like, working with Standing Rock to create renewable energy for that community and by that community. Similar idea with Navajo Power on the
Oh
solar
yeah.
side. And that was really interesting because it was a syndicated investment. So it was coming together with a lot of other investors to make what was really a dream um, a reality, or really to support that dream and make it a reality. And then I'd say there are a few other groups who are combining sort of local community efforts and job creation efforts with that sort of more regenerative, whether it's on the energy side or on the food side. And so from our perspective, like, we try to find investments that are at that intersection, right?
Hmm.
Historically, we've looked for, okay, this is the benefit to our planet and ecosystems, but then what is the benefit to the community? What is the benefit to people? Because at the
Right.
end of the day, the reason we're investing for our planet and ecosystems isn't just to the benefit of planet ecosystems alone, it's to the benefit of, again, a healthy planet for all. And so
Hmm.
where you can find investments that are creating jobs, where you can find investments that are benefiting communities that have been either overlooked or have had opportunities stolen from them. Those are the sorts of things that get us really excited. And I should actually mention, it's interesting here for those who are more in the weeds of their investments.
This episode is made possible by Impacts Asset Management. Founded in 1998, Impacts is a specialist asset manager investing in the opportunities arising from the transition to a more sustainable global economy. Impacts offers a well-rounded suite of investment solutions spanning multiple asset classes, including equities, fixed income, and private markets, seeking strong, risk-adjusted returns over the medium to long term. For more information, visit impactsam.com. That's IMPAXAM.com. This episode of the Future of Finance podcast is brought to you by the Intentional Endowments Network and our new Endowment Impact Benchmark, which is an exciting new initiative helping endowments and foundations measure their progress on sustainable investing. Participants receive expert feedback, the ability to benchmark against peers, and earn recognition for their leadership. If you're at an endowment or foundation that is ready to advance its sustainable investing strategy, or if you want to benchmark your progress against the field, or if you're looking for a credible way to show your stakeholders that you're taking these issues seriously, learn more and join the 2025 cohort at endowmentimpactbenchmark.org.
One thing that's enabled us to make investments like those is to change how we were thinking at the investment policy level.
Hmm.
So going back to that idea that, you have all of this value that is dependent on social and environmental systems, and you have different portfolios that serve different purposes. So would it be possible to carve out a portfolio that specifically focuses on helping to advance that charitable mission? And what would you need to do to enable the space to do that? And one of the main things that allowed us to do that was saying at the portfolio level, hey, for this specific portfolio, let's set a return profile of return of capital so that we can
Hmm.
continue to make these types of investments, but we're not actually, extracting anything from them. So you can have some investments that are going to completely lose money, go to zero. I mean, you
Hmm.
can have some investments that are going to do well. And at the end of the day, it's just balance out so that the portfolio stays the same
It's
over
sort of a
time.
break even.
Exactly.
Yeah.
What that lets you do is that all of these investments that otherwise might not even be able to get a loan from the bank, let alone venture capital investment that are really needed in their communities, but they don't kind of fit the profile of that sort of, unicorn business. We can help to get in early and allow for other investors who otherwise wouldn't look at it to come in afterwards.
And that's a carve out of the overall portfolio, kind of a
Um,
subset that focus on
That's
that.
one of our, yeah, so that's our what we call our catalytic capital portfolio. And we've got a
Hmm.
couple of different portfolios that all have their own purpose within our broader endowed corpus.
Yep, gotcha. And is it, most endowments in our network, higher ed endowments typically allocate to external managers. And so a
Mhm.
lot of this is conversation with how those managers think about these issues and what types of strategies they're implementing around sustainability and climate justice. Is that the case in all of those pools for the Sierra Club Foundation too, or are some of the pools like more direct, looking at specific investments directly?
Yeah, that's a great question. So in our catalytic capital portfolio, that's really where we've done the bulk of our, direct investments. So we've looked
Hmm.
at specific projects and underwritten them.
And
And
that's
that's
like specific wind projects you're talking about and Standing
Yeah,
Rock and
yeah,
stuff.
all of
Yeah.
that, like the
Hmm.
Standing Rock, Novel Powers, et cetera. And then in the other portfolios, it's primarily third-party investment managers across asset classes, as you might expect. So yeah, those conversations are also interesting and very different at a high level than what you would do at a catalytic level.
Right. And on that note, because when we first connected, you were working with Global Endowment Management, which is an outsourced chief investment officer firm for our listeners who aren't so familiar with this whole space. And what that does, just like the name implies, for endowments or organizations that don't have their own investment team or chief investment officer, they outsource that role essentially to groups like Global Endowment Management. And so your work there was really about finding those managers and engaging with those managers full time and having a lot of these types of conversations, right, about how managers are thinking about sustainability.
Yeah, that was a big piece of it. And so, yeah, so going back there, or sorry, I don't want to cut off too if there's more to the question. But yes,
Yeah,
that's
no, I was just and thinking about how that experience at GEM, what have you brought from that to your work at Sierra Club Foundation and really kind of a full mission aligned approach.
absolutely. So it's interesting because I think that role did two things. One was it wasn't my first adult job, so to speak, but it was my first adult job in the investment space. And I think like any first job at a any high quality investment firm, as Gem is, the number one thing you're going to get is a very, very, very big and very fast crash course into the
Hmm.
world of investment management. And so I think, one of the two main things it gave me was really um, a lot more comfort and uh, uh, I'd say knowledge of the investment space as a whole. You sort of cut your teeth working across asset classes, which I think is a bit unique for the OCIO space versus other types of investment firms. And so you
Hmm.
get a pretty good understanding of the public markets, the private markets, and kind of their sub pillars as well. But I think the other thing that was really interesting was the view that it gives you of the global economy. So the role that I was in at that time, yes, I was having conversations with everybody from, buyout managers to smaller early stage VC shops to long only public managers to hedge funds and so on and so
Hmm.
forth. Yes, we were doing standard deal execution and underwriting, but because I was also expected to have those conversations and to develop a little bit of expertise around what is the impact of these investments, and to do so in a holistic way, you just kind of look at investments a lot differently. And you also look at the world a little bit differently because what ends up happening is you're having conversations with getting to know the manager, getting to know their portfolio. And when you're actually evaluating those underlying holdings as well as the manager, you start to see what effects those companies have on a broad range of stakeholders. And it's
Mm-hmm.
no longer just this, I think oftentimes people might say, oh, this company is a bad company because I had a bad experience with them, or this company is a great company because they're a healthcare company. And you start to see, where is this company causing harm and who is this company benefiting? And I think that was one of the most unique parts of the role. It just gives you a much more nuanced view of the entire global economy. And very rarely did we come up against companies that, again, you're looking at the impacts on workers, yes, but also customers. You're looking at the impact on various aspects of the planet, from climate to ecosystems. Sometimes those impacts are not the same. You're looking at impacts on, sure, the person behind the register or the person in the corporate office, but also the person who's mining the materials downstream the supply chain, or the trucker who's transporting the finished product. And so when you're looking at all of those things and all of those inputs, it gives you a much richer picture
Mm-hmm.
of, again, who the company's benefiting, who it's harming. And very rarely did you find a company that was doing all harm or all benefit. Most
Right.
of the time, it was mostly harm or mostly benefit, and that's really what the a lot of the job was is this mostly beneficial to the broadest range of stakeholders, or mostly harmful, or does it have a outsized harm on certain stakeholders,
Mm-hmm.
even though it benefits most? These are all kinds of the nuanced things that you're looking at, and so zooming out, what it really gave me was a newfound appreciation for how complex um, questions of impact really are,
Mm-hmm.
but at the same time, how much simpler the ideas behind being a responsible investor really are. Because what it really comes down to is recognizing that all investments fundamentally have impact, and that a lot of people think about the regulatory space, governments, technology as changing the world, but we also have to look at the way capital flows. And so that goes back to the original point of shifting trillions, which is we want to shift at the scale of trillions, our ideas, how we relate to the world into investments, and where the money sits to really drive that world that we are to serve.
Yeah, it's so interesting and such a great point because so much of sustainability is really about systems thinking and, like you say, stepping back, taking the whole picture across time and space and thinking about, the impacts of all of our actions, our business models, our governance structures, et cetera. And that's why I love working in the investment space because investors are doing that all the time. As you say, these are complex systems that they're trying to get a better understanding of to figure out
Right.
where good investments are and where there's risk and everything else. And so I do think investors are kind of in some ways uniquely qualified to really look at the data, what's happening, and if they can step back and take that broader aperture as opposed to some more traditional approaches of really just kind of taking a narrow view on a company or looking at the financial statements and the like. But as we were talking about earlier, thinking about the broader risks over time and how that impacts the value. And so I agree. And like you said, I think we certainly need all those other things, governments and civil society and the like. But I think capital and investors are key in this transition for sure. I guess speaking of that, well, a couple things. You talked about kind of jumping into your work at GEM and would love to hear what prompted that. And, we're also trying to reach students and young people that might be interested in careers in the financial services space and the sustainable investing space. So yeah, maybe reflecting on how you got into this space, what kind of advice might you give others that are looking to do the same?
Yeah, so I got into this space for a couple of reasons. One was uh, personal. So I was in a tricky financial situation. I had a lot of student debt coming out
Mm-hmm.
of college. Um, and in my first role, which was highly impactful, I was an educator. I was working through AmeriCorps,
Mm-hmm.
and uh, you don't really go from, sure, you can recognize that you need to make a change professionally. And I'd already had the sort of background in economics. So I was somewhat suited for the role, but
Mm-hmm.
it's really
From
hard.
your studies, you mean, in college
Yeah,
in
yeah, from
economics?
undergrad.
Yeah. Mm-hmm.
And it's really hard to go from, such a high impact, direct role, like being a teacher,
Yeah.
to working some standard corporate job or your typical 2 year stint in IB. On the flip side, it's really hard to be an early career teacher and to have the amount of financial commitments that I had at the
Yeah.
time. And so I was really looking to make a career pivot that would balance those two. So that was one reason. I'd say that the second reason was that this was a role that excited me because it seemed like it was at that intersection, right? I felt that I could learn a lot, and it really seemed like it was right at a time when you had this sort of budding industry that was impact investing, and in a place where I felt that that was actually serious and rigorous and not just lip service. I felt that I would get, and I felt that in the end, I found that I would get, very traditional investment training and at the same time get exposure to the way the world works, basically, and
Yeah.
to, have some material impact on, making that world a little bit better. And so that wasn't a piece that I wanted to lose from my prior work. It was just a very different scale, right? It's going from that direct scale of working with a few people every day to the very large scale of not really seeing the direct impact of your work, but
Right.
recognizing that it is highly impactful to the scale of billions. And so I think the advice that I would give to folks who are in a similar boat or who are considering entering this space is first off, to recognize the power that is inherent in the role. Um, Especially if you're someone who, you're sort of turned off by the idea because you don't want to touch finance with a 10-foot pole. Um, just to recognize that you can do a lot of good by being on the side that writes the checks rather than the side that asks for the checks. Um, and I would also say that if you've already overcome that hurdle, another step is just to look for people who you can relate to and who can provide mentorship.
Hmm.
I think everybody says that, but I think in this space it's especially important. I don't know a space where it's not important, but just in my experience, there are so many great folks at a variety of organizations who are just so ready to help and
Hmm.
with such a breadth of knowledge and wisdom and insights. And if you can learn from them, if you can support them, and allow yourself to, uh, uh, sort of find your way, but with their help, you can get really, really far, not only in your own career, but in actually driving change and having jobs that are very meaningful to you and that are really fulfilling. Because I do think that a lot of folks, certainly I was one of them, these days are not just looking for jobs that will, put food on the table, but if they can, are also looking for jobs that will either provide some kind of fulfillment or prepare them for something else that provides fulfillment. And
Hmm.
so um, that's that's very hard to find, I think, in this space. And so the more folks who are thinking in a similar way to you, the more likely you are to come across those kinds of opportunities.
Yeah, it's a great point. And I think you're right. I mean, mentorship's important in a lot of spaces, but I think particularly in finance, so much of it's relationship based, so much of it's just understanding the jargon and the lingo and how the pieces fit together, and folks who have been in it can help you do that. And we've definitely seen it with the interns and fellows that we have come through and work with us at the Intentional Endowments Network, being able to tap into the folks like you and others in the network that can help them out. And we've seen, as you said, a real willingness and excitement that people want to work with students and young people. So I think that it's not a hard ask in a lot of cases. Nice. Well, just to wrap up, I would love to hear your thoughts on kind of the current state of play in the sustainable finance world. Maybe on an optimistic note, kind of what are you most excited about? Recognizing there are always challenges in this space, but what's giving you hope in the space right now? And if you had a call to action for our listeners, what would that be?
The funny thing is, and this is rare coming from me, you'll probably laugh when I say this, but there's not a lot giving me hope right now. But there is, I'm a realist. And when I step back and I look at the reality of the situation, um, all I keep coming back to is just the reality of what it is that we're doing here. And at the end of the day, um, people have come up with all kinds of acronyms and all kinds of words and all kinds of jargon. But at the end of the day, if you are a fiduciary, if you manage money for other people, or if you are an investor who is thinking longer than 10 years, um, at the end of the day, you have to pay attention to all of the risks that are faced by your portfolio and all of the opportunities therein. And If your portfolio over time is just destroying our communities, destroying our ecosystems, destroying our health, you're not going to have a very healthy portfolio. We're not going to have a very healthy country. We're not going to have a very healthy world. And it's not like you can just protect one investment from those harms. At the end of the day, every single one of your investments that's contributing to the problem is putting all your other investments at risk.
Yeah, these are systemic risks.
Systemic risks, exactly. And on the flip side, if you're not thinking about the opportunities that are in front of us for the trillion-dollar opportunities by investing in communities that have been overlooked, by protecting our planet for generations to come, then you're leaving money on the table. And so, what I would say gives my realistic, hopeful view is just that at the end of the day, impact investing is honest investing and it's good investing because investments already have an impact. It doesn't matter if you want to ignore that impact or acknowledge it, they have some impact. And so recognizing that and implementing, whatever is right for you or your organization, but implementing a response to that, that's all it means for us to be a good fiduciary. And that's what gives me hope in the years to come. It's that more people are continuing to see that. We don't care what we call it. I just care that we do it.
Yeah, absolutely. I think there's a lot of hope in that. I see it in the work that you're doing, groups like the Sierra Club Foundation are doing, even other endowments and institutional investors that maybe don't have the same like direct mission alignment in terms of, grant making and other things that are in this space, but just recognize that this is better investing and the returns are there. The market dynamics around renewables and things globally are still very positive despite what's happening with some of the, at least the rhetoric coming out of the new administration in the US. I feel like there's a lot of momentum and investors see that. So it gives me some hope despite all the headwinds. And how about a call to action, whether that's for students or some of the investors that might be listening or anyone else? What would you say if you could just give our audience a call to action for something that they could do to help build this momentum?
Absolutely. I'd say, can I give us 3 call to actions?
Absolutely. Bring them on.
All right. So the first one is for investors. I would encourage you to reevaluate how you approach your portfolios and to use all the many tools out there that are available to do that, whether that's an inquiry into the Endowment Impact Benchmark or joining the Intentional Endowments Network or leveraging your shareholder power if you have public investments through platforms like Iconic, where the Sierra Club Foundation has a profile that you can vote with us during shareholder season. So that's the other right to vote. For students and young people, I'd highly encourage you to get connected. Connect with me on LinkedIn, follow the Intentional Endowments Network, apply to their internships. There are a lot of great opportunities out there, and there's a lot of jobs out there as well, if you know where to look. And then I'd say the final piece is really an invite to everybody, which is definitely, sierraclubfoundation.org/shifting-trillions. /shifting trillions and check out some of the work that we've done. And there's also resources to other organizations that we've supported and worked with in the past.
Awesome. Yeah, definitely check that out. I mean, there's so much potential here through the Shifting Trillions initiative and the work you're doing. So I do hope people check that out. And Pedro, thanks again for taking the time. It's always great to chat. Really appreciate it. I hope we talk again soon.
Likewise. Happy holidays, George.
You too. Take care. All right. Thanks for tuning in for the Future of Finance podcast. We hope you found today's conversation insightful and inspiring. Don't forget to subscribe or follow us on your favorite podcast platform. And please take a moment to rate, review, or share the show. All of this really helps us to reach more people like you who care about creating a thriving and sustainable future. And it's a really easy way to have a big impact. So please do follow. A quick disclaimer, the content of this podcast is for informational purposes only and does not constitute investment advice. Investments and strategies discussed may not be suitable for all listeners. Please consult a financial, legal, tax, or accounting professional before making any investment decisions. References to managers and funds are for informational purposes only and should not be considered endorsements or investment solicitations. This podcast does not monitor fund performance or guarantee the accuracy of third-party materials or statements. This has been an episode of the Future of Finance podcast, exploring how finance can shape a vibrant and sustainable future. Thanks for listening, and we'll see you next time. This episode is made possible by Impax Asset Management. Founded in 1998, Impacts is a specialist asset manager investing in the opportunities arising from the transition to a more sustainable global economy. Impacts offers a well-rounded suite of investment solutions spanning multiple asset classes, including equities, fixed income, and private markets, seeking strong, risk-adjusted returns over the medium to long term. For more information, visit impactsam.com. That's IMPAXAM.com. This episode of the Future of Finance podcast is brought to you by the Intentional Endowments Network and our new Endowment Impact Benchmark, which is an exciting new initiative helping endowments and foundations measure their progress on sustainable investing. Participants receive expert feedback, the ability to benchmark against peers, and earn recognition for their leadership. If you're at an endowment or foundation that is ready to advance its sustainable investing strategy, or if you want to benchmark your progress against the field, or if you're looking for a credible way to show your stakeholders that you're taking these issues seriously, learn more and join the 2025 cohort at endowmentimpactbenchmark.org.